But right now, we have to march ahead and look at the next set of earnings. We are talking about Godawari Power and Ispat, where the top line was lower, EBITDA declined as well, margin contracted sequentially. The company has given a guidance for iron ore mining at 3 metric tons and pellets at 2.6 metric tons for FY24. Abhishek Agrawal, Executive Director at Godawari Power and Ispat, is with us to talk about the performance. Abhishek, thank you very much for joining in. Just want to start with the basics. I mean, your revenue was down about 8%, EBITDA down about 33% in the quarter gone by. Can you tell us what's happening now with the pellet prices and give us a sense both in the domestic market and in the export market? I mean, do you expect things to get better as we look at the first half of the current year?
Good morning. I think first thing, I think it won't be right if you compare last year quarter-on-quarter basis this year, because last year was exceptional, for commodities where iron ore was as high as, $200 or $250. So eventually, what goes up comes down. So I think we performed quite well in this quarter, looking at the current market scenario. On the pellet guidance, yes, we maintain a pellet guidance of 2.6 million tons, mining at 3 million tons. On the domestic and export side, we haven't started exporting yet.
Oopsie. I think we've... yeah, Abhishek, we can, I think, let's try reconnecting if we can in just a bit. It's talking about the guidance on the pellet side. But Nigel, his argument is that just don't look at it year on year because you had exceptionally high base last year. So perhaps that's something that we need to kind of keep in mind as well, right?
Yeah, but I would like to hear from him because he said they've not yet started exporting. Prior to this export duty that was levied, they were exporting close to 65 to 70%. And now they've said that it's more favorable to do it in the domestic market. So I'd like to know what is the strategy from there on. I think we have him back with us. All right, Abhishek, you were making that point. You haven't yet started exporting, right? And we're not going to compare it on a year-on-year basis, but we would like an outlook from year on. So if you could tell us, no plans of exporting for the first quarter, because by now, some of those contracts should have already been tied in.
The reason for not exporting is because the domestic realization is still much better, at least higher by 10%. So, as a profit, making, you of course want to realize more value than, rather exporting. But we always open for the export market. As in when the opportunity presents, we will start exporting.
All right. Roughly, you have given your realization as 10,000 rupees for the past quarter. Currently, what is the price of pellets?
Yeah, for the domestic realization, it's about 9,000 rupees. And for our high-grade pellets, it's about 10,500 rupees.
10,500 rupees. So the 9,000 compares with the average of 10,000 of the last quarter.
Right.
Okay. All right. And what about the sales volumes of pellets for for the past for the coming year? You gave us the pellet mining that we got. How much will sales be, pellet volumes?
So we maintain the sale at the same levels, about 1.8, 1.9 million tons, because this will be going for the DRI production for steel making.
Okay. And what do margins look like? Give and take everything. The pellet pricing, I believe your iron ore mine that was shut partly, that has restarted. Hopefully you have no problems out there because the captive iron ore holds you in good stead. What is the margin band we should work with? 18 to 20% is what you mentioned in the past.
Yeah, if you look at the the coming year, I think 18 to 20% should be achievable in this current market scenario.
Okay. Give us
and on the mining side, I would like to clarify one thing. Whatever issues we have faced in the last couple of months, that have all been sorted now, and the mining operation has resumed normally.
Okay, so mining operations are normal. Give us a sense of capex and cash utilization plans for this year. I think you've got about 800 crores in the books.
See, this year, there were a couple of projects we were taken up for the debottleneck, like the turbine one and, expanding of the steel capacity. That will be completed in Q2 of this financial year. On the remaining capex, we are waiting for the clearance from MOEF on the mining as well as on the pellet side, and as well as on the 1 million steel plant which we applied last year. So on the capex side, I think this year there won't be much capex, but from next year onwards, once we have the approvals, so the mining expansion along with pellet, and hopefully we can also start the blast furnace expansion in the new area. So I think next year and the next... Sorry.
Yeah, Abhishek, why is it taking so long, these approvals? Last quarter as well, you said that you're hoping for it. By when does these approvals come about? You're looking to enhance capacity from MOEF. Do you expect it in quarter one? By the end of quarter one, should it be done?
No, for the pellet, we applied it last quarter only. So, it's about 6 to 9 month process. So for pellet, I am very much here. I can hear you very clearly.
Yes.
We can hear you as well.
Perfect. So for mining and pellet, we should expect, end of Q2 or early of Q3. So once we have the EC approval, we'll start the expansion and we start investing in the project. So the financial, I think the major burden of the capex will be outgo probably from January onwards, which is Q4 of this year, and next year, which is 25.
Okay. All right. Thanks very much for joining in and giving us all of the details there. That's Godawari Power and Ispat. Before